Good morning, beautiful people. Turbo traders are here. Other traders are here, and welcome everybody to the end of the week presentation of what's on Hans's mind, because I'm sure you've been wondering all morning. And I'm going to tell you, whether you like it or not, I am going to give you my views. We're going to go over some trades. We did some very nice trades last week. We'll go over those. And of course, I am here representing Option Pit and Turbo Income, where I like to turbocharge things. The turbocharge, like if you guys watch Knight Rider, remember the turbo boost? This is kind of like turbo boosting things in your portfolio. Good morning, Bruce. Good morning, Vicky. No option trade. Okay, so have I got, can everybody hear me okay? Because that's first and foremost. If we're not communicating, then we've got a problem. Laptop mic, eh? Nice. You know what? I hooked it up. Oh, here we go. Check, 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 check. Is that a little bit better? Okay, terrific. Okay, so in Turbo, we have some positions we're managing. We are now, I crossed out 6 for 6. We're 8 for 8, I think, and even better if we include some unofficial trades. Although we're taking maybe a little bit of heat on a Netflix position. Serves me right for betting against, small bet against, probably what is my favorite name out there. I mean, I recommended it on a TD Ameritrade show a few years ago at $225. Remember when Ackman just got out of it, and that was really the spot. 220 bucks or something like that. So yeah, so Christian's put in the way that you can join in with our service, which is fantastic. We get, if you talk to anybody who's in it, we do everything. It is income, and it is income enhanced, right? So there's all kinds of ways to look at income, and there's very traditional income plays. There's other ones. We do turbos. I'm going to show you one that we closed, that we have on right now. So let's talk about markets. So these April showers, right? They sell in May and go away. I don't know if that's going to happen. Maybe at this point we kind of run up pretty good, but I have this sort of feeling that we're, probably just going to kind of inch up. And so I've really been saying this for the better part of a month, that the bearishness just got too extreme, and we've seen flinch after flinch after flinch, right? So we've gone from 4,900, which was existential risk. Thank you, CLN. He says Turbo is an outstanding service. That is terrific to hear. And so we've gone from this kind of end of the world existential risk to suddenly flinch. And I think, maybe the intention was to play hardball for a long time, but in the end, I think it would have destroyed. It would have really, really pulled us back. So what has changed? Well, there's been a big change, and really everybody's been kind of piling onto the bearish side. The Ed Yardenis, everybody just been lowering their estimates, their targets for the S&P, getting very, very bearish. I think everybody is very offside. So this is what I've been presenting to Turbo Income, to our turbos, as we call them, my wonderful turbos. That basically we're just kind of in a sort of, for now, I'm going to show you a lot of data on how I sort of see this, sort of a bit of a grind up, right? It's a bit of a grind up kind of environment, because this has been one of the least participation kinds of rallies that we've seen in many, many years. There's been, in fact, selling all the way up. So people are really not in, they're on the sidelines. A lot of portfolio managers are kind of looking at this going, oh man, if this keeps going, I am going to underperform. So I don't want to get super, super bulled up, because I do believe that the easier money has been made, right? We've rallied 1,000 points. Now, can we continue to grind up? Well, yeah, because people are still getting in. So let's talk about, we talked about this bearishness, right? And this is we haven't seen bearishness. Like, we don't have to go over this too much again, but 11 weeks of this, the AAII sentiment never happened, right? Incredible amounts of bearishness. At all these systematic trades that have gotten out, CTA, vol targeting, I'll explain those a little bit. They've really gotten out and they've barely gotten back in. And so as a result, we've really had this sort of bounce back, even in things like IWM, right? So IWM, massive shorts in there. If you guys watch Skew and how expensive puts are, they went off a cliff, kind of expensive, like beyond expensive, going back decades. So everyone was very bearish, and so there's been a bounce back. I think IWM is kind of an interesting place, because if we do get higher for longer rates, that's a part of the war of the economy that's going to continue to struggle as people kind of, have to reset debt and deal with these higher rates. So this is maybe an interesting place to perhaps put on some hedges. So we talk about that a little bit. But really, if you look at where the bulk of the benefit has come, it's been in the S&P, but look at the NASDAQ. It has really come back. And so this is a very significant change in texture. Now, maybe we had a lot of big bear market rallies in 2022, but this is a big change in texture here that I think we can't ignore. So you want to be really careful getting too bearish at this point. Yes, we are extended a good ways past the 9-day EMA and the 20 for certain. I mean, look at this move past the 20. We are way up here. So I think a little bit of digestion is in order, but generally there's kind of this feel of maybe a little bit of a bid, because just nobody's in, right? So people have to continue to get in and chip away. I'm going to show you some Terminator strategies that have no choice but to get in. So we've had this rally back, and you have to recognize that we have this 9-day that's crossed the 20, crossed the 50, crossed the 200. We've got the 50 starting to cycle up again. This is becoming it's going from a negative picture, which was down, and really kind of smacking its head on that 20-day, right? You can watch those 9s and 20s for signs of continuation, right? So we got up to that 20, dropped again, got up to the 9 and 20, dropped again, got up to the 20, dropped a little, got up to the 20, dropped again, and now we're through the 20, and things are starting to give us a more constructive picture on the way up. And this is really where I started to get I was chipping away in here, but started to get more bullish in here. And here we are. Now, nobody could have foreseen this China situation resolving itself. Oh, hey, Shane, Chuck, Jose, Carl, so quickly, right? So that is another massive flinch. So we had flinch from Trump and the White House. And then now that was the biggest one in a way, because, everyone thought that this negotiation was going to be hardcore and it was going to take months and months and months at the very least to sort out. So that has put a lot of people wrong-sided in this market. And I think that can take some time to unwind. So we'll look a little bit at those. We're going to look at the VIX profile, the Skew profile. We'll look at the 9-day to VIX. Tesla, we closed a turbo yesterday, 101% gain just in a few days. So that's, if you got in on one single contract, you made $985. So that's half your yearly membership on one trade. The NVIDIA shaping up. I've got to take a look at this chart here. Pretty good news this morning. I'm surprised NVIDIA is not up maybe a little bit more on the UAE news, a little bit of extension of the Saudi news, right? So it's game on for NVIDIA again. And I think the AI trade still looks good. Little bit overextended, but I think it still looks pretty terrific. And we'll talk about our pair trade that we did last week, which is killing it. So, NVIDIA looking good. I think it could possibly still rally into earnings. And I think we're going to get all-time highs at some point. So we've got this nice turbo trade on. I think we're up around 50% on that one as well. I'm not ready to close it. We closed a meta trade for 25%. We had a bunch of nice ones. Here's some members here. And I'll talk about my repair trade in a minute. Oh, here's somebody who made 35% on the meta. And then the SPY, so we've got an income trade that's under pressure a little bit. So you got to move your feet. And this is one of the things you're going to learn in turbo income, is that you got to do something, right? You can only be patient to a certain extent. And so we have this trade that on the China news just kind of blasted through there. And so I put on a repair trade. And so the repair trade made more than what we can lose on the original trade. So we basically were up on the pair on those two trades. If you include the repair trade with the original, we're up. We made 128%. And here's somebody who one up me. Of course, I won't say his name, but he had to one up me and make 181% on that SPY trade. I only made 128%. So he'll be teaching the class next week. Just kidding. And so this has paid for this trade, which expires in June. So we still have time for the June trade to come back in. And if it does, we can really turn this into a very nice situation. So we've got some nice things in the works. Let's take another look. We've got this 10-year yield. So the 10-year yield up around 450. A lot of people, yeah, how dare that person, Jose? I wasn't impressed, and I was thinking of kicking them out of the service because it's embarrassing. I know, 128% it was like 2 days. I think it was 1 day. The repair trade paid in 1 day. I think a couple people had kept it on, and they're really, really killing it on that trade as well. And I don't want, if you made more money, I don't even want to hear about it because you're going to just kill my confidence. I'm happy with 128. Don't overdo it. Okay. If you want me to, you better shut up. So we got the 10-year at 4.5. Now I hear people talk about how this yield is a problem, and I think it could be a problem at some point. 4.5, I don't mind, right? Absolutely cool hand, Vic. I'm totally kidding. I want everyone to do better than me all the time, because then I can start learning from them as well. So 4.5, I'd rather have 4.5 than 3 or 3.25 or 3.5, right? So I think people kind of miss that. If we're at 3, it's because we've got a recession, we've got big problems in the world. Maybe, we've got some problems. So 4.5 I can handle. I think if we start to push past 5% on the 10-year, I think it's going to be kind of, yeah, Luigi made 80% in a few hours and got out. Terrific. Nothing wrong with taking a win. So, I think that's something to watch. I think that I don't think U.S. exceptionalism is going anywhere. And if you look at all that foreign money that's left the market, the U.S. market, if they start to come back in, that could be another bit of fuel to the upside. So these are just things. I'm not saying do something or don't do anything, but I'm just saying these are things to think about. That if we start to see further positive developments and money start to come back in, and everybody going, "Oops, daisy, I made a mistake," the market's not cheap, but markets are not always about flows. Or they're not always about fundamentals and valuations and metrics. This just could push us to new highs. It's really quite possible. So what we're seeing on the skew side of things, and now skew, for those of you who don't understand or haven't heard of it, skew just talks about, well, how expensive are puts versus calls. So it's one of those sort of geeky option things that we'd like to talk about, but it really can give us a lot of insight into what's happening underneath the hood. So you'll hear Andrew talking about the VIX curve and his one number that we presented this week, which is a fantastic looking service. But these are those little things that you learn as you learn more about volatility and learn to look at the signs, the little sort of breadcrumbs that are sitting around that can give you some insight. Skew is interesting. We had very, very steep skew in that sell-off, which makes sense. Now we're seeing that people are sort of selling out their puts and they're buying up that upside. So one of the things I've been saying for weeks is that upside's too cheap. Everyone's focusing on the downside and they're forgetting about upside, which has made plays interesting. Like I have upside, MSTR, and things like that. That's not even in the service, but because we tend to focus on certain kinds of names. But oh yeah. Sorry, Christian. Yeah, somebody was asking about 30 or 90-day membership. Yeah, absolutely, Ed. We'd love to have you. And so we see that people are kind of reconsidering that, right? They're starting to push up those upside calls, whereas they were very flat and unimpressed. How does that happen? Well, we've had an incredible amount of call selling. So what happens in markets when people feel that the upside is maybe limited and they see a VIX of 25 and 30? What do they start doing? Well, they start selling calls to generate some income, right? And I ran hundreds of millions of dollars in covered call funds for years, for a decade. And that's what you do, and that tends to suppress that upside, right? So it kind of compresses the upside because the call side is very supply driven. The put side is very demand driven, right? So you can almost think of skew as being a difference in two worlds, which is, what are people doing? What are managers doing? What are we doing? What are investors doing? Well, they're buying protection, and they're often selling upside to kind of generate some yield. The blue and yellow lines, yeah. So these are just ranges, a 10th percentile, 90th percentile ranges for a 90-day range for where skew can be. So you can look at this yellow tends, it can get as high as here, which is very, very steep. It's come down a lot since during the recovery. And in fact, right now, it's kind of like, getting pushed right down, and the upside. And so you can kind of see the green is for the green skew, and the yellows for so we don't have to get into that too much, but these are sort of ranges that you find over time. Now, part of what's happened is and I've got Arnie over here. He can't, the Terminator, that kind of describes a lot of the strategies out there. So when I say that this rally was very mechanical, I mean that it's not so much people getting in as it sort of flows. I mean, I know that's people getting in, but it's systematic flows, right? It's short gamma, and everyone's panicked because they're short a whole bunch of, dealers are short upside gamma, and they have to chase things up. And there's all these things. We don't want to get too far into those secondary Greeks and things like that. But the idea being mechanical is often driven by these kinds of strategies that were really out. So vol targeting strategies, what do they do? They buy when vol's low, and they sell when vol's high. And they're the Terminator strategies, right? They can't be bargained with. They can't be reasoned with. They don't feel pity or remorse or fear. They just do what they got to do. And so lately, what have we seen? Well, we've seen movement drop off. Remember, we had those daily ranges that were as wide as we've seen since the global financial crisis. Well, that data drops out of the sample because they're looking at the past month. And as soon as those early April days disappear, then volatility measures drop, and these guys have to start buying, right? So this is mechanical flows. We have lots of mechanical buying out there. They don't have any choice, and they're going to get in, and they're still buying, right? So there's a bid to markets right now. Now, we have to see some more data to drop out. Now, you can't sort of paint all these strategies with one brush. Some of them are looking a little bit more longer term. So it'll take some time for like a 3-month measure to start dropping more of the data. But for now, they've kind of bought in. And I think the important point here, this is a very simple slide, but they're only back to the 15th percentile. So these strategies that buy at certain times are only at their 15th percentile of what they normally buy, and 7% percentile of their 10-year exposure. So there's more room for, if volatility stays low, right? That's always a big if. I mean, we're always one tweet away from something crazy happening. But as it is, we have a lot of people who've missed this run. We have a lot of these mechanical strategies that kind of have to keep buying. And so that sort of leads me to believe that, cautiously bullish. And I think we can kind of march towards that 600 level on SPY, and maybe even beyond that a little bit. And so don't necessarily smack your head against the wall betting against this, because this is an uncycling of fear, right? There's a kind of, people think that just because the VIX has gone from 50 to 20, that it can't just kind of drift down a little bit. And so that's kind of where we're at. So we're looking at opportunities. We've got some of those trades on that I mentioned. We've got the turbo play on NVIDIA, and I'm going to show you some charts in a moment that help us to decide. You get the indicator in Turbo Income that tells you, is it time to turbo? Is it time to sit around and maybe do more traditional income harvesting? Is it time to kind of be careful and sit on your hands? That is really the crux of income trading is understanding your environment. And I'm not saying you have a crystal ball, but I'm saying that when the signs of risk are very elevated, you are going to alter your behavior. And I think that's important. You have to do that as an income trader, because one of the big things with income trading is a lot of strategies. You'll see people yammer on about, well, we've got 95% win rates. And some people have 95% win rates and still don't make money, or worse, they lose money, because you have to make sure that you stay out of those dicey situations as much as you can. So when I look at, this is a nice scanner here that I use sometimes, looking for, this is kind of giving you an idea. Everything on the left here means puts are very expensive, and over on the right would mean that the calls are very expensive. So we have a little bit more of an even sort of dispersion of names here. Whereas when we were selling off, everything is on the left side because the puts are getting super expensive. So now, a couple of names I really love: Costco, Hood, very interesting names to me. I still like Meta. I mean, it's pulling back a little. It's maybe had a little bit of a strong run there. Nvidia is kind of middle of the road. So it's a little bit flat. It's not really giving me a huge indication, but I like it for other reasons. But if I'm looking for a turbo trade, for example, I might use something like this to kind of go, you know what, Costco's looking kind of interesting because it's giving me that asymmetry, right? It's giving me this nice pricing to use some income to get some leverage. And that's what we do in the turbo trades quite a bit. So we're always, and the idea of turbo is this just big filtration process, and we're going to use different filters for various kinds of markets. Right now, we're sort of probably leaning back to a little bit of growth, maybe a little bit more growth to middle of the road, where, you're not getting into those defensive areas quite as much anymore. And so you're looking for those opportunities in some of those growthier areas. We have to see, right? There's a lot still up in the air, of course, with the economy. But I think we're going to get to the point where we do get that slowdown that people are expecting, but markets are going to go, we've got to slow down, but we're looking to tax benefits. We're looking to regulatory tailwinds. We're looking to more deals with the 200 countries around the world that are looking for deals. So we're looking, the market's going to start to look to the future. And we do have these issues of rates, yields, deficits, things like that do need to be dealt with. So all is not 100% clear, but so we filter, we look for quality, we look for technical sort of benefits. We want names that are looking really, really good. Of course, we're always looking at things. I showed this last week. We're looking for quality names, a Costco, a Netflix, a Meta. These are terrific names with amazing cash flow, and high cash flow names do better by 18% a year than other names, right? So you want, sometimes that stuff makes people's eyes glaze over, but I can teach you to fish, but I will give you the fish as well. I will bring you a nice fish every week. And really lately, I've been giving people lots of fishes to ponder. So we have this wonderful backdrop of, I think, kind of a persistent bid at this point. Now, we looked at the skew profile. We looked at, let's take a look at that VIX profile. This is one other positive thing that I think we have to acknowledge, is that, and this often happens, this is kind of the VIX thing. What I think people kind of maybe get confused about is that the VIX term structure goes back to this very happy picture. You just want the whale. Everybody wants to be the whale. All the girls want to date the whale, and all the men want to be the whale. So this is your very happy picture, right? And sometimes that only happens after a very big rally. And after a very big rally, a lot of retail is kind of going, well, we better short the market again. We were just at 5,000. But you got to be careful with that, because suddenly structurally you're in a position where they're increasingly, we're going to get lots more positive gamma, because people are just going to kind of start to sell upside calls and create that positive dealer gamma, which reduces volatility. And you're seeing we bounced off the little dip yesterday. We bounced off a little dip this morning. So I'm not saying we can't continue down. It's just that kind of environment that has a lot of positive things. And sometimes that very positive structural stuff, and Andrew's very good at this, he'll just be like, look, the structure says this, and we are going to play where the edge is. And the edge right now is in being a little bit cautiously optimistic to the upside and playing some of those short vol products and things like that. So he does it in a very nice way that's very hedged. But that's kind of where the edge is right now. And so really that's what the game is all about, looking for edge, staying away from negative edge. I see people doing cash secured puts on earnings plays, things like, there's negative edge generally over time in those kinds of trades. You want to be in those smart trades as much as you can and stay away from the bad ones. So we have this nice backdrop here. And so I'm starting to look at some interesting things, right? So the MTI really kind of steers a lot for me. If I look at some of my favorite names and look at Hood, I showed you that scanner chart. The skew is still kind of looking interesting in Hood. It's kind of giving me that nice downside. This is starting to line up nicely for a turbo. You've got a whole bunch of greens in here. You've got low volatility, so it's not maybe from a traditional income standpoint, it's not giving you maybe a whole lot. So it's a time where, maybe on a little sell-off technically towards, the high 50s again, this could be a nice turbo setup because you're getting this nice positive turbo green. And it would be 5 green if it weren't for the sort of cautionary dampener in here, down here, that's pulling us back a little bit. We've got VIX still up somewhat high. And that could be a name that I'd want to look at. We can look at Costco, another name I really, really love. I'm not getting as positive a look here. So on Costco, even though I love it, and even though, we've got earnings probably next month, I think, it's a name that I really like, but it's a name where I probably wouldn't go for the turbo. This is kind of arguing for a bit more sort of your traditional income type play. So that's where we kind of put on our usual. Did we have one on Costco? I think we did have one on Costco that we made money on. And so that's another name that I'd maybe look at again for a potential income play. I can't remember what we made, maybe 18% on that one in a few weeks. So the traditional income plays are very, very capital efficient. So for folks with small accounts, it's perfect because you could put these trades on for maybe $800 in capital for one particular trade. And you've got a shot at really, we have some that make 15, 20, 25%. There's a lot of there's a lot of ability to kind of move the needle very, very quickly on those kinds of income trades. Netflix, of course, starting to turn green here. This is one that could look interesting. So this is a name where I might look for a little bit of a pullback before putting something on. NVIDIA. So we've got a turbo on here. We're getting these nice greens. We've got some positive momentum. Semiconductors are back on. I think AI is back on. I think AI is good. I don't think we're in late inning here. I'm very, very constructive in this space again. I mean, you can see, look, Saudis, the people are still going to need billions and billions. We talked about this last week. Oh, okay. So before we run out of time, let's go over our trade. So we've got our NVIDIA. What we did last week is we bought, first of all, we did the Uber, right? So we bought the Uber. Now, I don't know if you guys have it. I closed this for like a 340% gain, but it was the June 90 call that we got into. Where was it? 149. Yeah, it was 149. And yeah, I think AI is very, very much on. And I want to position, I know all the other semis have done very well as well, but I just, NVIDIA is really kind of the sort of, best in show kind of name. And I think they're really going to continue to hoover in most of that business. And now Trump is kind of going, well, maybe national security isn't as important. So let's start, I don't know what Jensen did, but it's working. So we got out of this for a 340% win. And then the NVIDIA pair trade, which was the long NVIDIA, short, the long NVIDIA call, long Google put, is looking good, right? So we got into this one, the August 150 call at 220, I think it was. Those are 680 bid. I got out a little bit lower, but if you've got that, that's, that's a pretty good win. Yeah, I'm worried about that too, Jose. I think it is going to put a lot of people to work. I think it's going to put some people out of work, but I think it's going to put some people to work. But there's going to be a really big transition where people have to kind of figure things out again in order to adjust to this new reality of AI starting to really take over everything. So one of my favorite sayings last few years has been, well, don't fight it. We can't fight it, so invest in it, right? Don't fight it, invest in it. That's your hedge, right? That is going to help you out when this sweeping AI just kind of does its thing across the economy. And I think it's going to be very positive for the S&P. I think it's going to be uncertain for certain areas of the economy. There's no question about that. So, and then the Google put, so we bought the August 120 put. Was it the August? Yeah, it was the August. The August 120 put, I think we paid $1.50. So we're out about, what is that, 85 cents on that one. So on a one lot, you're down 85 bucks on this one, but you're up about 400 and something dollars on the other one. So on the, yeah, I do, Jose. I'm still skeptical. I mean, look, it's jumping today. It's a low valuation. I'm not worried. I am not going to sell that put. What I'm going to do is I'm going to wait for more weakness. If I start to see some confirmation, like as a trader, you should always kind of think of, don't necessarily add to bad positions. You want to add to good positions. That's one of the great skills you can have as a trader. What some people do is they just keep adding to bad positions. They want to revenge trade. They want to just keep throwing good money after bad. So I'm going to kind of accept what this is doing right now. If I start to see it maybe get under 160 again and get a feel that that my narrative is back on, which it clearly isn't right now, then I might add to that position. But for now, that pair trade is working out fantastically. So you're up 400 bucks on a one lot on that pair trade, and you still have till August. So you could sell out that NVIDIA call, take a nice win, and then just kind of sit on that put for free and kind of see how things work out. And what you could do is if it drops down into the 150s, you could maybe just sell a put against it, right? At some point, you could maybe sell the 100 put, something like that, to kind of maybe spread it out a little bit, spread the trade, and maintain that downside, but take a little bit of risk off. Thank you, Enzo. The turbo trades have been awesome. Yeah, I want to give this NVIDIA maybe just a little bit of, it's pulling back on that deal. So that's maybe a little bit surprising, but look, it's had a $20 run just since last Friday. So you kind of have to, I mean, not quite 20, but let's say $17 run since last Friday. So it needs a little time to digest this move. And I feel like they're going to keep buying it into the earnings, because I don't think the earnings are going to be bad. If they're bad, then we have to reevaluate on the whole AI thing. But as far as we can see, everyone's saying they're continuing to buy. All the big cap tech is saying we're continuing to buy. So here we are. That's it. So hopefully you guys took in something of value today. We're looking at some MTIs, and absolutely check out the Turbo Income. We have a yearly deal. We have a 2-year deal. I don't know if we have a 3-year deal, but the further you get in, the more you're going to save. And then we have other ways to get in on a monthly basis. So terrific way to get exposed to all kinds of ideas from somebody who's done this. I've managed $1 billion in option strategies over the years, market maker, fund manager, all that stuff. So I give you everything. You get an amazing course, you get tools, you get all sorts of great stuff that are absolutely going to make you a better trader and investor. So CLN did the 3-year. Terrific. Looking forward to making lots of money over the next 3 years. So that's it, guys. I better let you go because I'm sure there's some other things you need to get to. And I really appreciate you being here. Thank you so much. And we'll see you next Friday, and we'll follow up on some of these things, and we'll take it 1 week at a time. But I'll be in the chat. So if you join Turbo Income, I'll see you in there.